Hello beautiful blockchain people. Today let's analyze the price chart of the crude oil or WTI that is currently trading at the level of $105.45 per 1 barrel. So this is the monthly chart. To some extent we're really very familiar with the price chart of the crude oil. Here, let me remind you that the lowest price was when the pandemic, the coronavirus pandemic started back in the first half of 2020. So at the bottom of the price chart, a long leg Dodge form. We're really very familiar with this part of the price chart. Then the price skyrocketed and now we have levels above $100 per 1 barrel. Now, if we have a look at these candlesticks here, for example, we have a sequence of bullish candlesticks with ascending local lows and ascending local highs. Of course, this is the current candlestick for the month of March. We still have 3 more days, so this candlestick may change. But at the moment, it confirms the continuation of the buying pressure because once again, we have a sequence of higher lows and higher highs. Of course, the tall upper shadow of this monthly candlestick signals that there is a lot of selling pressure here. Some people probably are booking profit. That's why these prices here are relatively high for some investors and they are exiting the market. But I would like to highlight that this local high is still significantly above the previous one. So this is a bullish signal in the long run. So this is in the monthly chart. Now let's have a look at the weekly chart. Okay, this is the weekly chart. Once again, at the bottom of the price chart, we have here in the weekly chart similar to the long leg Dodge trend reversal candlestick. Actually here this is a hammer, so a small body and a very tall lower shadow followed by another hammer. Then the price skyrocketed. Here during these dips we had a bullish engulfing here, we had a bullish engulfing here as well, and this is what we have at the moment. This is a candlestick at the top of this price increase similar to a shooting star followed by a hammer. So this is a bearish technical formation, this is a bullish formation. Then we have a bullish engulfing here. So this bullish candlestick covers with its body the body of the hammer. So it's a confirmation of the potential, let's say, continuation, let's say, of the price rebound. Now we have a bearish candlestick, but the current week has just started. So we're at the very beginning of this week. Let's wait and see what happens here. But once again, here we have some interesting candlestick formations. Once again, this is, let's say, some candlestick similar to a shooting star. We have a hammer here, we have a bullish engulfing here. So I would say that this is a confirmation of some kind of consolidation because the tall upper shadow here indicates that there is a lot of selling pressure, but the tall lower shadow indicates that there is a lot of buying pressure here. So this is, let's say, the consolidation range. But we have to keep in mind that in the weekly chart we had a very tall bullish candlestick here. That's why even if we witness some kind of correction, this sequence of mainly bullish candlesticks with ascending local lows and ascending local highs continues. That's why the bullish sentiment, I would say, remained in place. Okay, this is according to the weekly chart. Now let's have a look at the daily chart. We have 3 moving averages. The first one is the 20-day moving average, or for the period of 1 month it is heading upwards. So we have this, let's say, continuation of the uptrend. Also, I would like to mention that the price skyrocketed here, then it declined, it dropped below the 1 month moving average, then it rebounded, and now we're, let's say, at the 20-day or at the 1 month moving average. So this is the key support, let's say, for the price chart of oil. Then we have the 60 days moving average, or 1 quarter or 3-month moving average. It is heading upwards as well. I would say that this is the key strong support, let's say, in the midterm for the price chart of oil. That is currently at the level of $95 approximately per barrel. And then we have the 200 day moving average, or for the period of 9 months or 3 quarters. That is, let's say, the strongest support for the price of oil, currently at the level of approximately $80 per 1 barrel. And of course, it is heading upwards as well. Next, what I want to highlight is that we have a bullish distribution of these 3 moving averages. At the top is the 1-month moving average, in the middle is the 3-month moving average or 1 quarter moving average, and then is the 9-month moving average or 3-quarter moving average. So this confirms the continuation of the buying pressure. Of course, if we see some kind of ups and downs, once again, the key support is at the level of $95 per 1 barrel, and this is the 3-month moving average. But definitely, we have this continuation of the bullish trend. Next, let's have a look at the 4-hour chart. Okay, this is the 4-hour chart. Of course, it's obvious that the price is heading upwards. This local high is below the previous one, so this is a small signal indicating that there is a lot of selling pressure at these higher levels, but we still don't have a lower low below the previous one. That's why I would say that here the bullish trend remains in place. And if we try to find some technical patterns, for example, let's assume that this is the trend line, then we had something like this if we connect the local highs. So this is an ascending broadening wedge, so this is an uptrend. I would say that at the moment the upper line of this wedge is the support line, because the price has exited this wedge. That's why probably here at the upper line of this wedge we have also enough support. And I would like to mention that, let me even change the visibility of this element. So let's say this is the key support at the moment for the price chart of oil. If we switch to the daily chart, I would like to highlight that it is exactly at the level of the 3-month moving average, or the purple line. So once again, we have 2 technical formations or patterns that confirms the key support level, and this is namely the upper line of this ascending wedge and the 3-month moving average. So that's it for today, fellas, about the price chart of oil. Please share your point of view as a comment below. Of course, I wish you a very wonderful day. Good luck in the financial markets, and I hope to see you in the next one. Thank you for watching.